Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Nathan Hager, joined by Bloomberg's Dan Curtis, watching not just stocks on Wall Street, but stocks in Seoul after that historic sell-off for the Kospi in South Korea. Good morning, Dan.
Good morning, Nathan. That's right. So the Kospi fell over 12% for its worst day on record. And I'm watching a lot of those Korean names because that pain is continuing into the U.S. pre-market. So companies like LG Display, which is ticker LPL, is down 10%. Korea Electric Power, KEP, down 7.5% alongside POSCO, PKX. Those are also down 7.5%. So Korea got hit really hard. 800 of the 836 stocks in that index fell. But that's because it's been up so much. Even after the 12% drop, the index is up 20% year to date. Compare that to the S&P 500, which is about flat on the year. And the two largest companies in that index, Samsung, SK Hynix, those memory chip companies are about 40% of the index. That's been a big draw to the Kospi, so that's really come back down today.
Are we seeing a read-through, Dan, for some of those companies' competitors in the U.S.?
No. So SanDisk is up 3%. Micron is up 3% as well in the U.S. pre-market. Memory has been somewhat protected from the sell-off. Even Samsung, SK Hynix, the two members that I just mentioned in Korea, those rebounded after the Korean close in late trading. So memory hasn't died with the Korea rollover. It's just been some price taking out of Korea this morning after the massive climb.
Okay, keeping things overseas then, I see Adidas or however we're saying it now is on your list as well. What's happening with the apparel retailer?
I'll go with Adidas since I've been living in London for a few years. So that's
fair enough.
I mean, that's just how I say it now, I guess. So that stock is at a 3-year low in German trading. The shares are down 6%. The company is projecting operating profit of 2.3 billion euros. That's about $2.7 billion for the year, well below estimates. It has a history of setting low bar for earnings. So some analysts are saying that might be overly pessimistic and that they may actually come out a little bit stronger. But that's really weighing on shares this morning. The company, trying to convey some security, has extended the contract to the CEO. He's the architect of the company's revamp. He's been at the helm for 4 years, so they're giving him more time to work on the turnaround as the general sportswear industry is under a lot of skepticism around growth.
And you got your eye on Gitlab as well. What's going on with that company?
Yeah, so Gitlab shares ticker GTLB down 6% in pre-market. The software company, development company forecast for the current fiscal year, earnings were below estimates. The company sees about 80 cents per share. The estimate was 106. So those shares are falling 6%. That's as we've seen a lot of weakness in the software space. Gitlab said bookings growth, that's potential revenue, has not scaled with actual realized revenue. And so that's part of the reason that those forecasts are weaker than expected.
Now let's close things out, Dan, with Ross stores, because that stock's still moving after their earnings.
That's right. So Ross stores, that came out last night, but those shares are up in the pre-market right now, 7%. Earnings per share came in at $2 versus $1.80 roughly estimate. Sales also stronger. Those shares are getting a nice bounce in pre.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.